Kevin Prendergast, Director of Wealth Management at the Retirement Network, Leland Smith. I'm recording this video on Friday, August 25th, 2023. We're going to get into the July 2023 minimum present value segment rates here in a moment. First, it's the dog days of summer, so it's not a lot of news necessarily on the AT&T front, but we have seen the stock market come back down a little bit so far in August after a very strong 7-month period to start the year. So with the stock market coming back down, often a good time to see if you have it in your budget, see if you have the cash flow to ramp up a little bit. Those 401k retirement savings plan contributions, take advantage of the decline in stock prices. And of the menu of investment options available to you in the 401k retirement savings plan, the most direct exposure is that large cap US stock index fund. It's a very effective way to get exposure to some of the biggest companies that are publicly traded based here in the US. Very low cost. It costs something like 30 cents per $1,000 you invest, 30 cents per $1,000 you invest. So very low cost and gives you exposure to several hundred of the very biggest companies that are publicly traded based here in the US. And you can simply direct your future contributions more towards that fund if you'd like. You don't have to swing your entire existing account towards that fund. That might not be appropriate depending on your time horizon, your risk tolerance, your objectives, etc. So just know that you don't have to swing your whole account, the money that's already in it, in that direction to take advantage of this decline. Maybe you just direct your future contributions through payroll to something like the large cap US stock index fund. All right, hopefully this is helpful. Otherwise, let's get into the July rates. All right, there they are. So the first segment is elevated, right? It's even higher than where we were in November of 2022. November tends to be the operative month for the AT&T pension programs. And again, these interest rates just affect lump sums. So if you're more of a monthly annuity type person, this is maybe interesting, but this is more relevant for folks who intend to take the lump sum. So the first segment has continued to trend higher. So it's up at 5.35, largely a function of what the Federal Reserve is doing to combat inflation. The second segment, still elevated, but down a little bit from November, 5.28. Same story with the third segment, still elevated, 5.1, but down a little bit from November. If after watching this video you have questions, feel free to reply directly to the email containing this video. We do monitor that inbox. Otherwise, visit the retirementnetwork.com, click the Get Your Free Assessment button. See you next month. Bye.